When it comes to speeding up your dividend snowball, yes, you should be making contributions to your portfolio, and yes, you should be reinvesting dividends, but don't undermine the impact of buying stocks that are constantly increasing their dividend payouts. For example, we can see PepsiCo has a long history of increasing those dividend payouts, meaning as a shareholder, you receive more in dividends every single year. So in this video, we're going to be looking at 7 different stocks that recently announced dividend increases. Let's go ahead and jump into it. Our first stock we're looking at saw a big dividend increase, and that is stock ticker FAST with a 10.3% dividend increase. And if we jump over to Seeking Alpha, we can see over the past year, they're up about 7.34%. Now, if we go ahead and jump over to my dividend breakdown sheet, come up here and plug in FAST, all this data will load in. And like always, if you'd like to download any of my spreadsheets and also get access to the ticker data add-on in Google Sheets that allows you to automatically import stock financials straight into your spreadsheet, then you can head over to tickerdata.com at the link in the description. Now, what we can see with FAST is the starting dividend yield is sitting close to 2.2%, and they do have a pretty nice history of dividend growth. And you can see here, there's a couple of years where the dividend payouts were a bit larger, and that's because they paid out special dividends. Now, here's the caveat to all this. They used the vast majority of their capital to pay out dividends. 94% of their free cash flow was used to pay out dividends in 2024 and 88% of earnings. Now, the good news is free cash flow is still growing despite this. The 5-year free cash flow CAGR is sitting close to 10% and the 10-year free cash flow CAGR close to about 11.8%. And now if we go ahead and jump over to my stock screener and come up here and plug in FAST, the metrics we can see from this company are actually pretty impressive. Earnings have grown at a very healthy rate over the past decade. The same is true with revenue, and the same is true with free cash flow per share. Now, there's not a lot of share buyback, so it looks like the main priority is continuing to grow that dividend payment over time. Stock number 2 saw a massive dividend increase of 17.1%, and that is American Express. And over the past year, they've absolutely killed it. They're up about 53.3%. If we go ahead and jump over to the dividend breakdown sheet and plug in AXP, what we can see is, yes, this is a low yielder, a little bit below 1%, but the company has grown their dividend at a pretty phenomenal rate. We can see that 5-year dividend CAGR now sitting at 10.24%, and they've only used about 20 to 21% of their earnings to pay out dividends. And if we look at the free cash flow payout ratio over time, with the exception of 2020, it's remained in a very healthy range, pretty much close to around 10% for the past few years. Now, if you're not familiar with American Express, this is a high-quality company by all means. The company's certainly not as large as their counterparts Visa and MasterCard, which are also undoubtedly phenomenal companies, but the growth has still been phenomenal. We can also see they are constantly buying back shares. And if we look at that debt to assets ratio, one of the things we can also see is it's been reduced over time. So what does that mean? Well, it means AXP becomes a less risky company to invest in. I think it's a high likelihood we continue to see high levels of dividend growth from this company moving forward. Next up on the list, we have Air Products and Chemicals with the dreaded below inflation rate dividend hike of 1.1%. I always say this, but we have to keep in mind, anytime a company increases their dividend below the rate of inflation, they're technically paying out less in dividends, so something we have to keep in mind. Now, if we look at APD over the past year, they've actually done really, really well, up about 53.96%. And if we jump over to our dividend breakdown sheet, come up here and plug in APD. What we can see is the company has a starting dividend yield of about 2.11%. Now, it looks like they reduced their dividend in 2024, but that's really not the case. That's simply due to the timing of the dividend. In fact, if we scroll down and look at these dividends on a quarterly basis, or scroll down even further and look at the dividend history, we can see they have been increasing dividends consistently. Now, here's what we really need to look at. The free cash flow payout ratio, because we've seen some fluctuation over the past few years. But at the end of 2024, it was sitting at about 43%, which is a healthy range. But we can't see, it looks like right here in 2022, this spiked all the way up to 455%, and it actually went negative in 2023 because the company produced negative free cash flow. So a little bit of a red flag there, but overall the company has been able to sustain their dividend payments with a payout ratio of about 65%. At number 4, we have what I would call a quality compounder, and that's MSCI with a nice 12.5% dividend increase, and they've been pretty flat over the past year and had a pretty drastic sell-off in April of 2024, but have since recovered to levels they saw before that drop. If we go ahead and jump over to the dividend breakdown, come up here and plug in MSCI. What we can see is the starting dividend yield for this company is sitting close to 1.1%, but I want you to look at just how dramatic the dividend growth has been over the past decade. We have a 10-year dividend CAGR of 23.11% and a 5-year of nearly 17%. And this is all while maintaining a low payout ratio. Free cash flow payout ratio of 35%, payout ratio as of earnings about 38%. And this is only possible if a company is rapidly growing their earnings and rapidly growing their free cash flow, which we can see certainly been the case with the 10-year free cash flow CAGR of 19% and the 5-year at 17.5%. 2014 free cash flow was sitting at $254 million, and 2024 $1.467 billion. So phenomenal free cash flow growth, allowing them to grow that dividend at a high rate. We jump over to the stock screener, plug in MSCI. These charts really do look beautiful. Earnings have grown at a high rate. Same is true with top lines and free cash flow as well. And they also buy back shares, going from about 115 million shares outstanding in 2014 to at the end of 2024, just about 78 million. And if we look at return on invested capital, we have all the signs of a high quality company. Every single year since 2018 for this company, they've seen return on invested capital of above 20%. That's a clear sign of a company that is high quality and has competitive advantages. Next up on the list, we have S&P Global with around a 5.5% dividend increase, which is decent. But the thing is, the starting dividend yield isn't very high. Typically, if you have a low starting dividend yield, you want to see higher dividend growth than just 5%. But nonetheless, over the past year, the stock is still up close to 14%. And if we jump over to my dividend breakdown, come up here and plug in SPGI. Again, like I said, low starting dividend yield of just 0.71%, but they don't use most of their earnings and free cash flow to pay out dividends. Now, historically speaking, dividend growth has actually been really good, as we can see, with the 5-year at about 10% and the 10-year close to 12%. So this most recent dividend hike, quite a bit lower than what we're typically used to seeing. And free cash flow has been growing at a really high rate, so it's interesting to see that they didn't grow the dividend as much as they typically do. It'll be interesting to see if that's the case moving forward. Next on our list, we have Chevron with a 4.9% dividend increase. And if we look at the stock over the past year, it's been a little bit choppy, but it's barely in the green. For the most part, it's traded flat. It's up about 0.58%. If we look at the dividend breakdown, come up here and plug in CVX. What we can see is the starting dividend yield sitting close to about 4.26%. And historically speaking, dividend growth has been decent for a high yielder. We have a 10-year dividend CAGR of 4.5 and a 5-year of 6.5%. So you're getting a nice combination of starting dividend yield with dividend growth. Now, one of the things we have to keep in mind with these energy stocks is there can be a lot of volatility, specifically with the underlying fundamentals due to the price of oil changing. For example, if we jump over to my free cash flow analysis sheet, come up here and plug in CVX. What I really want to point out is if we zoom in, come over here and look at the free cash flow margin. What is this telling us? Well, it's telling us for every $100 in revenue the company generates, how much actually becomes free cash flow. And you can see just how much this has fluctuated over the past decade. At its worst, it was negative 7.7%, and at its best, it looks like right here in 2022, it was close to about 16%. So again, I do want to warn you, there can be a lot of volatility with the underlying fundamentals with these companies, something you have to be wary of. And then lastly, we have PepsiCo with a 5% dividend increase, bumping up their dividend to $5.69. And this stock's actually at about a 4-year low. In the past year, it's down about 16%. So if we jump over to the dividend breakdown sheet and look at Pepsi, what we can see is Pepsi now has a starting dividend yield at 3.71%. Now, what's interesting about this is actually if we jump over and look at dividend yield here on Seeking Alpha, this is the highest starting dividend yield Pepsi has had in over 5 years, but not just 5 years, actually in over 10 years. So this is a unique opportunity with Pepsi. They typically don't have that high of a starting dividend yield, and the 10-year dividend CAGR is about 7.7%, and the 5-year is about 7% as well. But here's where we have to be wary. Management told us in the recent earnings report they're expecting low single-digit revenue growth. The company's already using the vast majority of their capital to pay out dividends, so I do think it's likely in the coming years we could see lower levels of dividend growth, just like we did with this most recent dividend hike coming in at 5%, which is still decent, but lower than we've typically seen over the past 5 and 10 years. So there you go, those are 7 stocks that just recently announced dividend increases. Go ahead and let me know what you think of these stocks in the comments down below. And like always, if you'd like to download any of my spreadsheets and also get access to the Ticker Data add-on in Google Sheets that allows you to automatically import stock financials straight into your spreadsheet, then you can head over to tickerdata.com at the link in the description. So with all that being said, thank you guys so much for watching, and please don't forget to like and subscribe to the channel.